U.S. stocks experienced a decline on Thursday following further developments in the trade relationship between the United States and China. The S&P 500 fell by 0.2%, the Nasdaq Composite declined by 0.3%, and the Dow Jones Industrial Average remained relatively unchanged. The volatility in the market was in response to a phone call between President Donald Trump and Chinese President Xi Jinping, initiated by Trump, according to Beijing's Ministry of Foreign Affairs and the Chinese Embassy in the U.S. President Trump described the conversation as a very good phone call on his Truth Social platform, but details regarding any potential progress in trade negotiations remain unclear. Trump mentioned that the trade teams from both countries would be meeting shortly. Tesla was among the notable losers in Thursday's trading session, with shares dropping by more than 9% after Trump expressed his disappointment in CEO Elon Musk. In response, Musk took to X to assert that Trump would have lost the election without his support. Investors are closely monitoring labor market data, as the number of jobless claims increased to 247,000 last week, surpassing the Dow Jones estimate of 236,000. This follows a recent report indicating that private sector payrolls grew by only 37,000 in May, falling short of the expected 110,000 increase. The upcoming May non-farm payrolls report on Friday will likely draw significant attention, as economists polled by Dow Jones predict a gain of 125,000 jobs, which would represent a decrease of 52,000 jobs compared to the previous month. Despite these concerns, the three major U.S. indexes remain on track for gains this week, with the S&P 500 rising over 1%, the Dow adding 0.6%, and the Nasdaq climbing approximately 2% week-to-date.